Hey guys, welcome back to the Complete Foundation Stock Trading course. In this lecture, we're going to be covering another technical indicator. This time, it's going to be the average true range, or the ATR. So, what is the average true range? What is the ATR? It's an indicator that we use and every single professional trader uses out there. Okay, it's not an indicator that's going to help you predict too much where a stock is going to go, but it is going to help you predict how far it can go. Okay, so this is one of the main reasons we use it, is because if you're trading a stock, okay, and you have your strategy and your strategy tells you, hey, I want to buy, I think this stock is going up or this stock is going down. Well, how much do you think it's going to go up? How much do you think it's going to go down, right? Where do I take my profit? Where do I put my loss? Okay. And again, stop losses, take profits. We're going to talk about that more in other lectures. But how do you decide on that? Well, what you're going to use is this indicator, the ATR. The ATR is going to help you figure out how much a stock moves in a day in dollar value, right? So it's average true range, which actually stands for the average amount that it moves in a day. Okay, so if I'm looking at let's put it up here, let me take this off. So if I am looking at a stock, okay, stock price, let's see here, and the average true range, I believe is done over the past 14 periods, or maybe 20. We'll check it out. Again, all indicators have a default period, but you can play around with them. So the way it's calculated, it's going to be looking at the average range of the last 14 days. So let's say this is a candle, then it gaps up here, and this is another green candle, and then stock might fall down a bit, go up. So then what we do is we actually add all these days up. We check the range of this stock. Okay, this one moved, I don't know, $1 on this day. The next day it gapped up and moved all that. That's $2. This day it went down 50 cents. Okay, so we add all of these up. Okay, we add all of these up. 1 plus 2 plus 50 cents plus all of them. We divide them by the total quantity, and then we get the average. And this is exactly what we call the average true range. So it's going to give us the average amount that a stock moves in a day in dollar value, not in percentage. Okay. And why is that helpful? Because if you're trading a stock that's super expensive or super volatile, well, it might have an ATR of $5, means it moves about $5 every day. Sometimes it moves 10, sometimes it moves 2 or 3, but on average, it's going to be $5. But then if you're trading a, not too risky, safe company that has an ATR of, let's say, 20 cents, well, that's different, right? The way you're going to trade this stock is not going to be the same way you're going to trade this stock, right? The amount of shares that you're going to buy in this stock is not going to be the same amount of shares that you're going to buy in this stock. Why? Because this is way more risky, can move way much more. And if you're making money on this one, well, how much should you make, right? Let's say this stock is a $20 stock, and you bought it at 20. And then it goes to, 20 and 18 cents. And you want to take your profits off the table. Would you take your profits off the table or no? Probably yes, because on average, that stock moves 20 cents a day and already moved 18 cents. It's very unlikely, or not very unlikely, but not too likely that it's going to go way higher. But if you had bought this stock, and let's say this stock is a $50 stock, and it has an average true range of $5, and you bought it at 50, and now it's trading at $51, and you want to take your profit, Should you take your profit? Maybe not, because it still has way more room to go. This stock moves. $1 isn't too much, right? And where do you take your loss? You know, if it went against you and it's at $49, is that too much? Is that not too much? So as traders, you know, and in any trading firm, when we start trading a stock, you know, somebody might come in and say, hey, I'm trading the stock ABC, it's super nice. I just got in at that price. First thing I ask, and first thing everybody asks, is what's the ATR on that? What's the ATR? Is it $1? Is it $2? How much money can I make on this, you know? All right, it's already up 50 cents. What's the ATR on it? Oh, $2? Okay, yeah, I'll buy some too. But if you tell me, oh, it's up 50 cents, but the ATR is only 20 cents, well, okay, well, maybe it's already too much up. So so it's not an indicator that you're going to use to like know if you should buy or sell. But you're going to be able to know, you know, how much profit should you take on that? How much loss should you take on that? Again, you shouldn't try to make, if you're trying to make, you know, $2 in one day on that stock, well, you know, the probability that this happens is extremely unlikely because this thing moves about 20 cents a day. You know, it'll take you 10 days for a move like that approximately to happen, right? So just so you can decide how much you want to buy, how much you want to sell, we're always going to be looking at that. So if I pull out trading view and I go on indicators and I add ATR or average true range here, first one comes out, ATR, and let's actually double click on it, see what they use. Okay, so they use the 14 days average, so the last 14 days. And look at this, the ATR right now, you can see it. So the ATR fluctuates with time, right? Because sometimes here the stock was more volatile, so the average true range was about over $3. Here it started to slow down, it wasn't moving that much. You see the stock wasn't as volatile as here. So it was about, you know, $2. So you see that there's spikes in moments where the stock moved a lot. You can see that the ATR also increased because the average true range increased. It was more volatile, right, at that time. So you can by looking at the ATR, if you're trading that stock at that time, well, you know, on average it trades about $2 a day, you know. But if you were trading it here, it wasn't moving that much. It was moving about, you know, $1.30 per day. So as of today, if I'm looking at Apple, which is the company Apple, the average true range is about $2. It's a $150 stock. So if you buy it and it moves $2 in a day, that's what it does on average. It's not something big. If I look at another stock, let's say I'm going to put at Sirius XM, well, I know that this is an extremely stable stock, doesn't move a lot. Okay, this is a scalping stock. People buy and sell bid ask, huge quantities of shares, and we'll talk about that in the advanced course, this type of strategy. But on a stock like this, look, the average true range is 10 cents. It's a $5 stock, moves about 10 cents a day. Okay, you know, before at one point here, it moved on average about 5 cents a day. That's how not volatile it has been, right? So if somebody comes out and tells you, hey, I want to buy the stock, I think it's going to 6, well, really, because this thing moves about 10 cents a day. Okay, or obviously it might have earnings, something could happen, you never know. But if you were trading it, if you bought on a small pullback and now, you know, you bought at 520 and it's up to 540, you know, it already made a good move, okay? But if it was Apple and it only made 40 cents, it's not a good move. So you always want to look at the ATR, know how volatile your stock is, so you're able to place your stop losses and take profits appropriately, which this is something that we're going to be doing in maybe not next lecture, but one of the following ones. All right, so that's going to do it for the ATR. It's our third indicator that we just saw. And that being said, I'm going to see you guys in the next lecture.